This is the Fibonacci retracement tool. Yeah, you probably have heard of it, and unfortunately, most traders use the Fibonacci tool completely wrong. I'm going to show you how to use it correctly and give you an amazing strategy using it. This strategy will give you sniper entries with tight stop losses and huge take profits. Then for the cherry on top, I'll give you a secret hack that will completely change the way you trade with Fibonacci forever.
Awesome! Melakaliki Maka!
So basically, after this video, you'll be a Fibonacci pro. Let's get straight to it. To start us off, we have to go over how the market moves. To put it extremely simple, the market will make moves like this. A move with a big upward trend, a retracement, and then the process continues, making this point a beautiful entry. And that's exactly our goal with the Fibonacci retracement tool, which is to predict the end of this pullback point as accurately as possible. So we can enter here and benefit from the move upwards with this little risk. As is possible, which is exactly what the strategy does. Now, there's a lot of controversy on what Fibonacci levels are the best. Trader after trader will sit there and fight over what they think the best levels are.
I think 0.716 and 0.618 are the best levels.
That's absolutely preposterous. Obviously, the 0.79 and the 0.5 levels are the best.
Actually, I've done my analysis and the 0.382 level is the most profitable.
Yeah, you get my point. Lots of traders use different levels, but for my testing in this specific strategy, these levels work the best. I'll be using TradingView as my charting platform. First, put your Fibonacci tool on your chart, and then go to the setting. Here are the levels we'll be using. 0.382, 0.5, 0.618, and 1. Giving you something that looks like this. These three levels are the most important, and what I call the golden zone. The golden zone is where price is most likely to pull back in reverse. Now, one of the biggest mistakes traders make when using the Fibonacci tool is not knowing where to have the starting point and the ending point of the Fibonacci tool. And this can cause a lot of problems because if you use the wrong starting point and the wrong ending point, you'll get some bad losing trades, for example. In this chart, a lot of traders would get confused. Do you put it here? Do you put it here? Where do you put it? Here's a quick and simple way to know exactly where to put the Fibonacci, so you get the perfect starting and ending point every time. Firstly, you need to understand that Fibonacci has a lot to do with swing points, and you want to always look for concrete swing levels in the market so you can be sure of the trend direction.
You sure about that? You sure about that? That's why?
After identifying the swing points on the charts, you have to mark these levels, as you'll be using these levels to draw your Fibonacci from a swing low to a swing high, and from a swing high to a swing low, depending on the market trend direction you're interested in trading. So now you know that strong swing points are important levels to help draw your Fibonacci correctly. Also, it is very, very important. We only use Fibonacci on strong trends. If you use it on weak trends, it won't work as much.
I know what kind of man you are.
Once you find a strong trend like this, grab your Fibonacci tool and mark it from the swing high to the swing low. As you can see, price came to the golden zone, we enter, and price hits our take profit with ease. Just this alone will work all right, but we're going to add some confluences with this to make it so amazing. Confluences are the key to success with this trading strategy. What I found works really well is pairing this with support and resistance, specifically retest. Here's what I mean. So here we found a very strong trend. We've identified the swing highs and lows. We get our Fibonacci tool and mark the high and the low. But if we take a little closer look, something interesting is happening. We have a strong resistance level right here, and price broke right through it, meaning it can now be used as a support, or in other words, a retest level. If you look even closer, the retest level is exactly where the golden zone is, adding even more confluence to the strategy. But wait, there's more. We can add even more confluence. To do this, go to your Indicators tab and type in EMA. Go to the settings of the indicator and change the length to 200. 200 EMA, a larger time frame, is going to act as a very strong support and resistance. For example, in this uptrend, you can see price use this EMA as a support and bounced off it many times. Then in this downtrend, you can see price use the EMA as a resistance, and again bounced off it many times. You see where I'm going with this? So we do the same thing. Find our swing high and swing low. Draw our Fibonacci tool. Look for price to retrace to the EMA. And it just so happens to also be in the golden zone confluence. But wait, there's more.
Wait. Hey. Wait.
To top it all off, we're going to be adding another confluence to make the strategy work absolutely beautiful. We will be using the anchored VWAP. If you don't know what the anchored VWAP is, it's basically just normal VWAP, but we specifically choose where it begins. So, for example, you would use it like this. Go to the left toolbar and select the anchored VWAP. You're going to have it start exactly at the beginning point of the strong trend, or where the red fractal is. This will put the anchored VWAP on your chart. Go to the settings of the anchored VWAP and uncheck all of these boxes beside the VWAP, as that's all we care about for the strategy. The VWAP works very similar to the EMA, as price likes to bounce off this line and can be used as support and resistance. So if you did the math, we now have 3 strong confluences with this strategy, making our trades have an extremely high probability of winning, and we have the best chance at finding the exact retracement point like we were talking about in the beginning of the video. This is how you would do it. First things first, I like to use the strategy on the higher time frames like the 1 hour or 4 hour. For this example, we'll be using the 4 hour. We see a big move upwards. Remember, if we're going to be using the Fibonacci, the move has to be a strong trend. We then draw our Fibonacci retracement tool with the help of our identified swing lows and swing highs. We now see where our golden zone is located. If we look a little bit closer, you can also see price broke through this resistance right here. And we can now use it as a support and retest off of it. It's also located exactly in the golden zone. We then add our 200 EMA to the chart and see it also is directly in the golden zone. Then finally, we add our anchored VWAP by starting it exactly at the bottom of this big move or at the red fractal. And as you can see, it is also exactly in the golden zone. So now we have 4 confluences, the golden zone, the retest, the EMA, and the VWAP, which means price has an extremely high probability of bouncing exactly at this point. I like setting my take profit at the high of the move and setting my stop loss right below the golden zone. And just like that, price bounces perfectly at the golden zone and hits or take profit just like we plan, and money is made. That's how I use the Fibonacci tool to find profitable trades in the financial markets.